Welcome to Keen on Retirement, a show dedicated to helping you thrive before and during your retirement years. If you are looking to grow and protect your wealth and want to make the second half of your life the best half, then listen in as wealth advisor Bill Keen sorts through the key issues that you need to know in a lively and candid way.
Hello, everybody. Welcome back to Keen on Retirement. Steve Sandusky here. And I've got Bill Keen and Matt Wilson with me here today. And Bill, you got a little different wardrobe than you usually have here. What's that hat you have on your head there?
Yes, Steve. Well, this is a hard hat that I was gifted recently. You can see here, if you're watching this on YouTube, we have a lot of YouTube followers now and viewers. You'll see it says the Veterans Community Project on my hard hat. And if you're a listener, I'll just paint the picture. I've got a dress shirt on with a tie and my hard hat on today. But I do have my sleeves rolled up. It's kind of, I don't know why, but it kind of makes sense. It feels like if you have a hard hat on, you should have your sleeves rolled up.
Where's your bobcat, Bill? Shouldn't you be sitting in a bobcat?
Yeah, or a shovel. Do you have a shovel?
Yes, I do not have a shovel here. Now, my building manager walked through just yesterday to introduce a new technician here that would be helping us with some of the work around our floor when we needed help with various items, checking the thermostats and other things, lights and so forth. And she came around the corner with the new hire, and I was sitting here with a hard hat on. But she said, "Oh my goodness, Bill, what's going on? Is things falling off the ceiling on your head, or why do you have a hard hat on?" But so. No, the reason I have this hard hat on, Steve, is you remember we had a number of years ago, maybe 3 years ago, we had a guest on the podcast. His name was Brandon Mixon. He was a combat veteran who had founded a charitable organization called the Veterans Community Project. Do you remember that, Steve?
I do. Absolutely.
Yeah, he had an extremely compelling story about his life and how he got to the point where he was with several other combat veterans to really address this issue around the unfortunate fact that somewhere around 20 veterans a day in our country choose to end their own lives because they've come across either the situation of being homeless or feeling like they didn't have the support or help that they could lean into, or they were simply embarrassed or didn't know where to turn. A lot of these veterans of all discharge statuses don't have the wherewithal or the understanding of how to plug into the resources that are available. And if someone's not just discharged honorably, possibly the VA wouldn't be as much of a support. So he and his other founders of Veterans Community Project realized that there was a huge need. And the way he puts it is any man or woman that raised their right hand to protect our country, they're going to have their back, regardless of the situation. Close to 30,000 veterans on any given night in the United States don't have a place to put their head, don't have a pillow to put their head on. And they founded VCP here in Kansas City. It started out with just one or two little tiny little homes. If you know, something that's been very popular here nationwide are these things called tiny homes, where people make their little homes in, 400 square feet or something?
Yeah, not much.
And so those are something that's become popular for people. They thought if we could create a tiny home community where we could help these veterans, give them a place to stay, make it a longer term thing, not just 30, 60 days, but make it like up to 18 months. I think the average stay that I recently studied was around 14 months at VCP, Veterans Community Project here in Kansas City. And I might add, now they're spreading across, I think we're in 5 different, I say we're because we partnered with them 5 years ago, which is still yet why I have this hat on. They're in Kansas City and 4 other states and expanding across the country. But if anyone listening to our program, has had an experience trying to help those in the homeless population, they know that if someone becomes what we call chronically homeless, and that means that it's highly likely they will never not be homeless. And not enough time on our program today explain some of those reasons why. But for a lot of the folks that are what we call chronically homeless, if you want to help those folks, you have to meet them where they are, and there are ways to do that. to sow into folks, meeting them where they are in their environments. But what we saw with the veterans and what they saw with the veterans that were teetering on suicide or chronic homelessness or both, that if they could help them, nurture them, shepherd them into this Veterans Community Project community, that close to 90% of them ended up graduating, if you will, from their process and program and becoming productive members of society. So that 5 years ago got the attention of myself, got the attention of Matt here, the other leadership in our firm at Keen Wealth, my wife Carissa, who runs our foundation and our community impact committee, and we said we wanted to step up and stand beside and behind this organization. So the reason I have the hat, finally, a long time coming, there's something that we're calling the Navigation Campus. So the 50 tiny homes are here in Kansas City, but now they've had a project called the Navigation Campus. And what we have found over the years is that many veterans fail to receive the services that they need because access to all these complex services is very confusing. I mean, I know how confusing it is for me just to try to get my car license. You have to get your personal property tax and your insurance and all the paperwork and find the time to go down and stand in the line. So imagine if you were homeless, you didn't have a vehicle. What if you were trying to go apply for certain things like Social Security or VA benefits or your license even? So these things what they're trying to do is create a navigation campus that harnesses all the collective power of the veteran services community here in Kansas City and bring them all into one block, basically. So they've raised enough money now to make it. They have a coalition of trusted partners, including like nonprofit agencies and businesses, local businesses, that will help the veterans with things like housing, emergency assistance, mental health, legal aid, substance abuse, health care, job training, financial planning, benefits navigation, and just so much more, all in one spot. So not just for the people that are living in the tiny home campus, but any veteran of any discharge status can come there fully free of charge and get the help and the service that they need. So that was one of the things that we stepped up and really partnered with VCP and some of the other donors to get kicked off. And we broke ground for that just here about a week ago or so. And because of the level of, I think, our involvement, our team's been out there not only on site, we've painted buildings and we've done all kinds of things, like boots on the ground, if you will, the Keen team, which we love to do out in the community. And I hesitate to say the number because it's not about necessarily a number, but it was a significant grant that we've made with them since I shared with you. We've actually sown over $500,000 into this project, into Veterans Community Project over the last 5 years, because we believe so strongly in the work that they're doing. So with all that in mind, I got a phone call, and on the groundbreaking day, they had the media there, all 4 local channels, several politicians, and a lot of folks came out, and they allowed me to get on a Bobcat, Steve. I got on a Bobcat, I should say on or in. I can drive a boat, I can fly a plane. I'd never operated a Bobcat, but I was able to get in there and I think I put 7 holes in the concrete, which technically qualified as groundbreaking for the new project. So, and they gifted me this hat as well. So I wanted to put it to use here. I know that was kind of a long explanation, but it's something that is close to our heart. I always say we have at Keen Wealth Advisors, we have, I guess I've adopted without even knowing it, Brandon Mixon's saying, I say, it's just raw verbiage, but we have the backs of our clients. We have the backs of each other here as team members at Keen Wealth Advisors, and we have the backs of our community as best we can. And so it's important to us to share that kind of spirit of generosity and making a difference where we can. There's a lot of negative stuff, a lot of anxiety, a lot of things out there right now going on in the world. And there's still really, really, really good stuff happening too, for lack of a better term. So thanks for allowing me to kick the show off today and share a little bit about that. Maybe we can link to Brandon's interview that we did. And if anyone out there ever wants to take a tour of the Veterans Community Project campus, certainly you let me know or reach out to them, and we'll arrange for that to happen. So good stuff.
It is. Yeah, Bill. Well, I appreciate you sharing that and appreciate what you and the team are doing there to really make a big impact with the Veterans Community Project. So such an important thing to be working on. We appreciate all the veterans out there and all the sacrifices that they make on our behalf to keep this a great country. So I appreciate everything that,
That's right.
that you're doing to support that. On another topic, and this probably ties into the kind of community work that you guys are doing there, Bill, is I saw that USA Today has named Keen Wealth Advisors as one of the best financial advisory firms for 2025. And I'm not sure exactly all the criteria that they use to select that, but I suspect community involvement is probably one of the factors that they look at as they go into that. So Matt, how did this come about? How did you guys get notified of this very nice selection here?
Yeah. I got an email in early April, and, just kind of looks like a random solicitation almost, one that I almost deleted, but it was, from someone that represented USA Today, and they were letting us know that we've been selected for this recognition, best financial advisory firm of 2025, one of them. And they said it was based on recommendations from other financial advisors, clients, industry experts. And, they have a survey that includes over 30,000 people, and they came up with, our name was on there, and we were just honored to be recognized for that. And it's, it was quite a surprise. Very, very, very humbling to get that.
Yeah. And what's especially great about that is we know there's a lot of surveys out there. There's a lot of lists out there where people get recognized. But in this particular one, this is not a pay to play thing.
Nope.
This is not where you guys had to nominate yourself and that sort of thing. So this was purely other people in the industry. As you mentioned, like 30,000 people were surveyed here. So you guys had nothing to do with this other than the great work that you do. So there's no money transacting or anything like that. So that makes this an even extra special award and recognition for the great work that you guys are doing. And I think this podcast is probably part of it, because this reaches a lot of people out there, and a lot of people across the country are familiar with Keen Wealth Advisors. And so, yeah, just a great recognition all around for sure. So congratulations on that.
Yeah. Thank you.
Awesome. Thank you, Steve. You've been a big part of that podcast. One of the
That's right.
core values of our firm is to sow education out there to the community at large, not just our clients, but of course our clients, the people that end up engaging with Keen Wealth, of course, but also so many others. So through the book and the webinars and the podcast now, which is in its 10th year, which is amazing. It's just amazing to me. 10 years have gone by. But in that 10th year of just trying to give folks a look behind the curtain, I should say, or around the corner, I suppose, or both, of what's happening in the financial services industry and how we can help people think through probably one of the most important decisions that's almost never ending decision as well. And that's what to do with their life savings in good portion of the cases, and how to collectively plan with their spouses or loved ones, and how to pass wealth, and how to pay the least amount of taxes, and all these things that are so, yes, there's so many dollar signs and decimal points involved, but there's also a lot of emotion and personal relationship involved. And so the depth of expertise that's required, between Matt and I, was just the other day, between Matt and I, we have right at 60 years of real professional experience in the industry. And so we try to bring some of that collective 60 years of experience, a life history as well. Now, if I added your experience, Steve, we'd be at 90 years of experience just from this one podcast?
120.
Oh, no, man, you wear that well.
I got the gray hair, right?
Exactly.
Oh, we do like the gray hair. Yes, we do. So anyway, thank you for that. And again, I know I do this in the past, but thanks for being willing to be our co-host. You've been on every single episode. Since we found this in 2015, I believe.
15, yeah. So it's been my pleasure and my privilege to be part of this. So just happy to be here. So appreciate that.
Thank you.
All right. Well, we have 2 questions here that came in from listeners, and these are both excellent questions. And so I'm just going to read the first one here so I don't miss anything. So this listener submitted this question. I'm evaluating whether to work with a solo financial advisor or a team-based firm and want to understand the structural differences from a risk and operational standpoint. Specifically, I'm thinking about factors like advisor capacity, error prevention and accountability, cybersecurity infrastructure, succession planning, and overall depth of expertise. Are there measurable advantages to working with a team in terms of service continuity, strategic breadth, or long-term risk mitigation? So that's the question, and I'm going to give a big pat on the back to this listener because that's a well thought out question. That's a very important question, and so let me throw it out to you two here. What's your response? What are some of your thoughts to what this listener is asking?
Yeah, I mean, first and foremost, yeah, it's really important to understand the all everything that goes on behind the curtains. As Bill was mentioning, on a lot of how these things work, because you might meet someone that, hey, that sounds good. I like everything they're saying, but you don't understand what are the other issues or other items that you should be thinking about, because they are important. When working with an individual like a solo practitioner, how what's their specialty, and they may excel in a certain area but not in many others, like estate planning or tax planning, or even if you have a business succession planning. So that's an advantage to the team approach, because a lot of times the teams are going to have different specialties among the different team members who can be relied on as resources when these situations arise. Another thing is capacity too, and responsiveness. A solo person, maybe they don't have very many clients, and so capacity is not necessarily a specific issue. But I think more of, well, what happens when they're on vacation? Do you expect them to be working the entire time? I mean, they may, but we know that time off is important, and kind of disconnecting from your work is important. And if you're always kind of working, that can definitely be an issue for certain people. But is the decision making going to be rushed if if they're on vacation, and they could be in a place that the time zone's completely different? I mean, there's so many different factors. And what if you have investment decisions that you need to make, and they're very timely, or you're expecting distributions, and you need something done very quickly? How easy is that for someone to do when they're on their own? Maybe they're having a health issue too, and they're dealing with that.
If somebody becomes ill, takes ill, and one of the things the Securities and Exchange Commission looks at is, do firms have appropriate succession plans in place?
Yeah,
because clients have if a client indeed is discerning about putting up where they're going to put their life savings, making sure that there's a successor in place, if God forbid, even if the proverbial someone got hit by a bus, I guess, if you will, or some version of short or long-term disability, up to and including, I guess, hit by the bus. What's going to happen to you and your family? I mean, it's almost impossible to think that could be, that puzzle can be solved for if you have one person, let's say, working out of a temporary office somewhere, or their home. And it's not that maybe the people are bad people, or it's nothing against the people, but I think about, I think about, if you think about the scale and scope of all the of financial services firms and companies that someone could engage with, like, for instance, Keen Wealth, we're well in excess of $1 billion that we do manage for clients. We're considered, it's funny because you could use the term large, medium, small. I mean, compared to Morgan Stanley or Merrill Lynch, what do they have, Matt? Trillions of dollars under management.
That's right.
These large bank-owned companies they have this massive breadth and depth of resources. But we operated inside those types of environments for about 22 years of my career, before we founded Keen Wealth as an independent firm. Although when we founded Keen Wealth in 2014 as an independent firm, we actually had the scale and scope to create a firm that had the resources that we believe are important, at the checks and balances. So we're not trillions, of dollars, which I would call large, I suppose, but for the registered investment advisor community, being over $1 billion is, I believe, considered a large firm, isn't it, Steve? Would you say? I think today
It is, yeah. And I think what I like about the size is that you've got a lot of the resources of some of the super large firms, either in-house or you've got access to them through other relationships that you've established. And yet you're not so small that you don't have that stuff, like some of the negative things that we're talking about here. So it's sort of the sweet spot for a lot of people in terms of clients wanting to work with firms of that size. I also like that you sometimes when you get to these really large firms, they try and do everything in-house. Well, what that means is they really want to limit you to just their people that they have, whether it's their attorneys or their insurance people. Whereas firms like yours, you have some of that stuff in-house, but then you can also go out and find the best of breed providers for some of these other services, so you can work with the absolute best experts that you've established relationships with while you guys are still quarterbacking the relationship. So I think it's, in many cases, it's sort of the best of all worlds here.
Right. And I look at, as I just took a few notes here in response to this listener's question, and I look at the team at Keen and how we've bifurcated each team member into really their expertise and specialty, what really they're best at. And it's always thinking about this from what is in the client's best interest, not my best interest. Not the team member's best interest, but the client's best interest. What is in the client's best interest? Now, I know we have a lot of financial advisors that listen to our program as well, so hopefully that they look at that things through that lens. But I look at the different departments at Keen Wealth, just at our firm, and I think about we have an investment committee. So the advisors here at Keen Wealth they're not required to be in the portfolios or making specific investment decisions. That's done at the firm level. And then the trading happens by a trading department. So the advisors that are advising the frontline client advisors, the planners, they're not tasked with having to think about where to put the money and when to trade it and how. It's very complex. We're dealing with people's life savings here across the board. It's got to be exact. It's got to be precise. It has to be thoughtful. That's being done by a committee that has decades and decades of years, led by Matt Wilson, actually, and then the research that we bring in-house, and I'm on that committee as well, along with others. And then the trading occurs by a different department. We have a client services department that processes paperwork, that makes things happen, that withholds taxes, that literally is the backbone of the firm. They are processing, taking incoming calls, and being able to respond. And there is a lot of depth there. So there's backup, support, oversight. There's management of these departments. We also have a financial planning department with nearly 20 financial planners that are credentialed or on their way to the credentials, that bounce ideas off one another, that work together, that check each other's work, check once, check twice, make sure it's correct, that have a true system of checks and balances, that support one another, working in teams. So think about the depth and the power of that. We have an IT department. We spend, Matt, hundreds of thousands on cyber security and IT here at the firm. Right. Think about that. Right. We have a department dedicated to cybersecurity. We have a compliance department that's also paying attention to everything that happens at the firm. It's always thinking about the client's best interest, always thinking about how to operate. It's not that it's a heavily regulated industry. And if you're working with someone that has that your perception is they have your best interest in mind, and they have what's called discretionary authority over your assets, up to and including your life savings, in my opinion, you would want to make sure, as much as you like that person, they might be really nice and have, a friendship, if you will, but it would be I would never have an investment set up where there wasn't checks and balances. And so, in my opinion, you don't want the compliance person being their own compliance person. Yeah. And with that, then the depth and scale of an organization, you think about the professional liability insurance. So a lot of these solo operators don't have the resources to carry any type of professional liability insurance, errors and omissions insurance. If they make a mistake, you hope that they self-report because nobody else is watching, or if they even figure it out, again, because there's no system of checks and balances. And if there's an error, do they have the resources to make it right? Which sounds outlandish to me, but a lot of folks don't know. And that's why this listener that asked is, like you said, I honor that the listener for asking that question. You know, a lot of these small practitioners or solo practitioners can go out and try to buy the same software, or they can try to emulate or cobble together a process to make it feel the same as working with a larger firm, a larger institution. But please understand, if there's a problem, it's not Charles Schwab or Fidelity or Pershing or one of the big custodians that actually custodies the money. It's not them that's on the hook. It's whoever the advisor is that's advising. So if that particular advisor makes a mistake, it's between the client and that advisor. Good luck going after them to make you whole. And which is a lot of the reason folks like working with the massive firms, because they feel a sense of security. Hey, at least if something goes wrong, there's going to be, they can get some, return from if there's a big mistake that happens. And so when you think about those things and you say, where do I want my life savings to be? And just, I would say, understand it. Finally, the thing that you've kind of struck a chord here. I didn't even realize we were going to be talking about this today, but I think about cyber threats. Cyber threats. It's probably one of the biggest threats that any of us have today in any industries or even personally. The cyber actors, the cyber crime actors have become just better and better and better. But if you think about the money that we spend, Matt, every year on our IT, the ongoing monitoring of the systems, you think about the resources that we put into that, the trainings that we put into that with all of our team members, the trainings that we put into it with clients. We bring in the retired FBI agent Jeff Lanza, and many other trainings as well to train our folks on how to think through this stuff. We have systems in place to check and double check when clients are asking for money or for it to go different places. All that requires personnel, depth of personnel. You can't have one person checking the one person, in my opinion. But you look at targets. So financial firms are targets for cyber criminals without question. Merrill Lynch, Smith, Morgan Stanley, all the banks, any financial firm is a target. But we were recently at a conference here talking about this, an industry conference. Who's really a target are the people that are holding themselves out as advisors, solo, working out of houses and different things, that do not have the resources to put into cyber, to put into the anti-cyber crime. And so these tactical cyber criminals say, wait, we could get all the same personal client information from these solo operators that the clients aren't really thinking through here. They're operating from a router at their house. Highly likely that there's limited resources to be able to think about being aware and fighting the breaches. And one person even put it at this last meeting we were at. They said, these folks are calling themselves fiduciaries, and because they charge a fee for their services on assets, which I guess is I would call that a super low bar to be able to call yourself a fiduciary. But we're really thinking about what's in a client's best interest. But the client's data, the client's personal identity, their identity, and all their personal financial data may likely only be as secure as the link that one of these advisors' kid happened to click on by accident one day at their home computer system. And I'm not saying that some folks that have home setups aren't super secure. Maybe they've been able to come up with some of the resources, but generally speaking, it's highly likely that the the fraudsters are looking at those other firms as opportunities to breach, and having it be way easier than firms that are spending hundreds of thousands of dollars and putting resources and training toward that cybersecurity. So these are things that, as this listener considers, I think that they should be thinking about. I really do. And then you have to look at experience of the person. Has the person you're working with ever been through a bear market, like a real one? We've had a few downturns with COVID and the tariffs here recently, but like a real bear market, something like 01, 02 or 08, 09. Have they really managed money through something like that and help people make it through one of those times? I mean, those are priceless bits of experience that I would be asking anybody that I was working with. In fact, I'd be asking anybody that you were considering working with all of these questions and see how they would possibly be answered.
Mm-hmm.
Well, Bill and Matt, I think that was a pretty thorough response there. And Matt, I don't know if you have anything that you want to add to that. I do have one other question that came in from a listener that we'll get to. But before that, is there anything else you want to?
Yeah, I mean, what Bill's basically talking about, and a lot of this is just the accountability and oversight, because the regulatory bodies, they don't sit there and monitor every single financial advisor or every single individual. They look at they have limited resources, and they look at the big firms and then kind of work their way down from there, and then follow up if there's complaints or issues or irregularities on their filing documents, things like that. But if is someone being held accountable, and that's kind of where the team approach comes in, whether it's peers, leaders within the firm, internal compliance. We have a whole compliance department, as Bill mentioned, and we do checks and balances constantly, make sure things are correct and something isn't slipping through the cracks. And again, you don't have that at a solo practitioner. They're the one and only chief cook and bottle washer.
That they are. Yeah. So definitely lots of benefits here to working with a larger firm that has a team, and as you guys just described there. So appreciate you going into some depth there on some of the advantages and disadvantages of the size of the firm. So the second question here that comes from a listener, and what I like about this is, in our business, we can get very jargony. And so we can use all these words that we understand because we're in the business, but oftentimes we get carried away and we think our clients understand these terms, but oftentimes they don't. And so this listener is asking here, here's their question. My spouse and I are interviewing financial advisors right now, and we keep seeing terms like fee only, fiduciary, and CFP, but it's hard to tell what really matters. Some advisors work for big name firms, others are independent. One even said that they could beat the market. How do we cut through the marketing and ask the right questions to avoid costly mistakes and make sure we're choosing someone who truly has our best interests in mind?
Yeah. I mean, I'd start off that just, acknowledging, this person, great kind of insight, because there's a lot of people that use the word financial advisor, and not everyone is held to the same standards. So choosing the right advisor or right planner is extremely important, because under certain arrangements, there's a lot of conflicts of interest, or hidden fees and products that are being sold. And as an individual, this is why we're so big on education, as Bill was mentioning, is because we want to educate the community on what are the things that you should be focused on, and how do you sift through all this stuff? Because people all look the same, they sound the same, they say the same things, but you don't know, well, what relationship am I engaging with? That fiduciary is a big thing. People can call themselves fiduciary even if they're not a fiduciary 100% of the time. So think about that. It's like, do they put their hard hat on, when they're not a fiduciary, and they say, okay, I'm not a fiduciary when I'm giving you this advice? Well, of course they don't.
Please don't confuse that with me having the hard hat on earlier.
Yeah. They can be under certain account arrangements of fiduciary in that standard, but then under this, I'm selling you a product, and now I don't have that fiduciary obligation. And again, it's up to you to determine that. And Yeah, of course, it's probably written in all the contracts and paperwork you're signing, which is filled with a bunch of legal, jargon and everything else. It's like, you're going to have to be an attorney with industry knowledge to understand what you're actually getting involved in. So I think that's extremely important.
Yeah, one thing I want to
yeah.
add to that, Matt, if I could here, is this idea of fiduciary. And it sounds like a big word. And as you've said, fiduciary means me as an advisor, I have to put you, the client, I have to put your best interests first and foremost. Okay. But then this other standard where if I'm not operating under that, I just have to do what is suitable
Yeah.
for you. It may not be in your best interest, but it's okay. It's suitable.
Yeah.
It's a much lower standard. Now, I'm not saying that that's necessarily wrong, but you have some advisors who can operate under either one of those depending on the situation. And so again, that's something to check out. Are you working with an advisor who sometimes has to be a fiduciary and do what's in your best interest? But other times, if they're selling a product, they just have to sell you something that's suitable for you. Okay. Again, doesn't mean it's good or bad, but it's just something to know. Whereas other advisors only operate under that fiduciary standard, which means I have to do by law what is in your best interest, which is above the suitability standard. So I think there's definitely a clear distinction there. And sometimes I think that nuance gets lost in the translation.
Yeah, they've tried, the regulatory bodies and the government have tried to kind of standardize that. And they got a lot of pushback, especially from those big brokerage firms, because that's where you see that a lot, where they're kind of, they call it duly registered, or they have these dual hats that they're wearing. And it's because, well, they like selling products, and they definitely like selling proprietary products that generate, a lot of revenue for those firms. And they push back enough to where, at least for now, the government hasn't necessarily come up with any, standard across the board. They still have these different standards that exist today, which is interesting.
Right. And I do want to be fair too, that just because an advisor might sell a product doesn't mean that's a bad advisor, right?
That's right.
But what we do want is we want our listeners to be informed investors. We want you to understand the difference so that you can make an informed decision about who you work with and what works best for you.
Yeah. I mean, clear disclosures and just be transparent. That's really what it boils down to, is the transparency. But, again, they try and do all that in the legal documents, not necessarily in your face kind of thing, which is, it's difficult as an individual to figure that out. Even mentioning the CFP designation, I mean, that is definitely something to look for. CFPs typically do have to hold themselves to a fiduciary standard. That's just a requirement of being a CFP holder. But again, you could be a CFP holder in some of these different relationships too. And, again, as long as you disclose those different types of standards, is that really, the right CFP for you in those cases? We find, as I mentioned earlier too, like everyone uses that term, financial advisors, used a lot. And sometimes you see that where someone only has insurance licenses, which, typically are products that someone's kind of pushing that are insurance based, come with commissions, and they have every incentive to sell you and recommend what's best for you, being insurance based, because that's the only thing they have access to. And, again, they can call themselves financial advisors, and they don't have this, they're not getting scrutinized any different by the public just because they use the same titles, which I find is interesting. Other things to be aware of is when a person that you're meeting with, if they're overly focused on the investments and how great of the rate of returns are relative to, the market or some sort of benchmark.
And they asked that here, they specifically said somebody pitched them that they could beat the markets or whatever.
Yeah,
right? If you see
that's
that.
right. Yeah. Cause it is, I mean, to me, that's a red flag, because, the markets are extremely difficult for anyone to, time or beat the markets. on a consistent basis. Yeah, you might have some things here or there, but over time, yeah, things kind of revert to the mean. And if they're relying on that, again, they're probably using products too as part of that sales pitch to show you something. Sometimes those things aren't even they weren't even real. And when I say that is they were back tested or they're hypothetical, which there is a lot of scrutiny around that, but you just have to disclose kind of where the numbers came from and everything else. And again, it's on you to kind of understand that. So I'd be very aware of any conversation that is around the investments and their ability to say, oh yeah, they can generate all these high rates of return and everything else. You see a lot of horror stories when things are pitched that way, because it ends up not working the way that most people were sold, and or could be something that is even worse than that. Ponzi schemes, things like that, because they have to continue to get money to make the thing keep working, which is how do you get it? Well, if you just promise all these outsized returns, kind of like the Bernie Madoff situation, you tend to continue to get money, and it works until it doesn't.
So wait a minute, Matt, you're telling me that you're not going to get me out of the market just before it goes down and get me back in right when it hits the bottom and
That's
it's going
right.
to go back up again? You mean you're not going to do that? You're not going to guarantee that?
If I could do that, Steve, I don't think I'd be sitting here talking to you.
That's right.
I mean, that's one way to think about it. Truly, if someone was that good as an investor, they would they would have so much control over the entire market, because think about these long-term rates of return and the compounding of them. It's like, well, they'd have half the trillions of dollars, which just doesn't make sense.
Right.
Things like that just don't make
Right.
sense
And
when that stuff happens.
And, the most recent example we have of that is, I think it was just back in April with the tariff situation.
Yeah.
And the markets dropped almost 20% within a very short period of time. And then as soon as there was another adjustment to the timing of the tariffs, boom, the market goes up.
Right
and as we
back
are talking here today, we're bumping up against all-time highs again. And so there's just no way that anybody could have played that and got out right before the 20% drop and got back in right at the 20%
Exactly.
drop. I mean, just not going to happen.
And think about, the blog that we put out last week. So for those of you that are subscribed to the Keen on Retirement blog and podcast here, a lot of you watch us on YouTube and you watch us, I say watch, listen to us on whether it's Spotify or iTunes or all the other platforms that we're on now. But then a good portion of you actually have what would you say, subscribed, I guess, gone to our website and subscribed, because we do a really good job of putting out show notes that summarize every episode.
Mm-hmm.
You might have heard me up front say, let's link to the episode with Brandon Mixon of VCP, the founder, one of the founders, in our show notes. So every other week we do a podcast. We've done that for nearly 10 years now. And then on the off weeks of the podcast, we do a blog post. And we put a lot of thought into those. Of course, the show notes are a summary of our discussions here on the podcast, but then the blogs are just they're our thinking, kind of our best thinking every other week there. So I highly recommend you getting on there and signing up for that. You get an email notification on Thursday mornings at 6 a.m. That kind of tells you and alerts you that something else is out there. So our blog, though, from last week that we just put out, talked about, Matt's talking about people promising these outsized returns, and it's not about trying to find the next secret that nobody has figured out yet in the long-term investment markets or the short-term trading or speculation. What it really is about is having a grasp and an understanding of the wisdom of the capital markets long-term. And I literally wrote in this blog just last week, when I got into the industry in the early 90s, the Dow was at 3,000.
Mm-hmm.
Today it sits at 43,000, and we just came off. Well, it would take me 2 hours to list all the negative stuff that's happened in the world and politics and globally and the economy since the early 90s. But even just the last short period of time, we've had tariffs and we've had the situation in the Middle East happening, and here we sit. 3,000 from when I got in the industry as a professional to 43,000 today. The purpose of our blog last week was to let folks know, to see the power of the advances in the market And then to understand that it's not a straight line. There's short-term volatility where we have temporary declines. And here's the wisdom. The wisdom is not about finding the next outsized thing that no one's figured out yet, or the next, and in my book, I call it steer clear of the next flash in the pan, the get rich quick thing. It's just understanding how the capital markets work and harnessing the cycles instead of being whipsawed by them. And that's what a solid, long-term, credentialed, experienced team that have been through those things will be able to do for folks. And the power of that is unbelievable. Most of the folks we work with have more money at the end of their lives than they've ever had in their lives because they've been long-term, patient deployers of capital with a good fiduciary advisor that's helping them be diversified and rebalance. And again, harness the cycles, not be whipsawed by them, along with a competent financial plan that's been put in place by a team of financial planners that are paying close attention to the rules, regulations in your own personal life. That is a combination and the intersection of those things for a super successful endeavor with your resources. So again, these people that are promising these outside returns, like you said, Matt, half of them probably were just made up, honestly.
Yeah.
And a lot of those people that promise that stuff don't even have licenses. And there's another whole episode we could go down on that too. The newsletters that people are selling and all kinds of things like that are promoting things that are outlandish.
Indeed. All right. Well, guys, I think that's probably a good place to wrap up here today. Lots of great information and insights that you shared. I hope each of you listening got some great value from that. And as always, you can go to the website at keenwealthadvisors.com and you can get the detailed notes for this conversation, as well as all the previous ones. All the blog posts that Bill had mentioned here just a moment ago as well are all out there for your consumption. Please feel free to tell your friends and colleagues about the podcast. We'd love for them to subscribe to it. Please go to the YouTube channel and subscribe to that as well to make sure that you're going to get notified when new episodes come out there. So we appreciate that. So yeah, as always, guys, thank you. And we'll look forward to catching you all on the next episode of Keen on Retirement.
All right. Thanks, Steve. Thanks, Matt.
The Steve Sandusky Advisor Network and Belay Advisor are not affiliated with Keen Wealth Advisors. Opinions expressed by Steve are his own and not necessarily the opinions of Keen Wealth Advisors. Keen Wealth Advisors is an SEC-registered investment advisor. Advisory services are only offered to clients or prospective clients where Keen Wealth Advisors and its representatives are properly licensed or exempt from licensure. The contents of this podcast are intended for the residents of the United States of America. No advice may be rendered by Keen Wealth Advisors unless a client service agreement is in place. This program is intended for informational purposes only and should not be construed as advice on or a recommendation of any particular investment, strategy, or as tax or legal advice for your specific situation. Keen Wealth Advisors is not a tax or legal advisor. To determine which investments may be appropriate for you, consult your licensed professional prior to investing. Information in this program was compiled from sources believed to be reliable. Due to the constant state of data changing, we do not guarantee the timeliness or the accuracy of the information provided. Our views or opinions at the time you are listening to the podcast may be different than they were when the podcast was recorded. Past performance is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any prices that are referenced or market forecasts are as of the date stated and are not necessarily our opinions moving forward. As always, please remember, investing involves risk and possible loss of principal capital. This podcast is not allowed to be copied, distributed, published, or reproduced without permission from Keen Wealth Advisors.